Thank you, gentlemen, for joining us on the stage today. I think I would like to take the leads from the previous speaker's discussion. Two things have been talked about. One, technology is going to play a very important role, and it was more talked about from a real estate perspective. But I personally think that technology is going to play a very important role when the word digital comes in play. And second point which was talked about was mostly about that limitation is in the mind. And the way the technology is emerging today, I don't think there is a limitation, actually. Across the globe, not only in the BFSI segment, I would say in every sector, in every segment, technology is actually opening the doors, which are unprecedented. I call it a biggest transformation ever seen by the global industry across the board. I think our topic of discussion is this word called digital transformation. I just wanted to ask a question from the audience. Which is the most abused word have you ever heard from a global perspective? Any guesses? Anybody? So I'll tell you. 2016 December, it was strategy. And 2018, we're sitting in August, it's called digital transformation. So I think, my whole objective of today's discussion would be to demystify this digital transformation. From a banking perspective, the one word which really is important is called, what is this bank? Okay? And I'm kind of rethinking again and again, why this bank, what this bank role is. We understand bank in a very different fashion. What is the future is going to be very different. So I'll start with Mr. Iyer, and if you can tell me, what do you think? What is this bank?
That's a tough question. I think if you look at the role of the bank, it's primarily has been to a regulated, trusted body where you can save money, right? That was the only function of the bank. And then they took on other things like payments and lending and stuff like that. And I think today the way I look at banks is that they're becoming underwriter of capital. And in some banks are becoming undertakers, but in general, a lot of them will function as underwriters. And I think really banks have to kind of figure out whether they are going to be on the front end or they are going to be kind of served by other people who will be on the front end. Just as we were all in this conference today, Google announced an instant loan on every, people who are using the TAZE platform. So now it's a Google branded loan, which is backed by a number of banks. So I think the question really is that, I think banks have access to the cheapest source of capital. And is that going to be their strength, or is that going to be their strength to be able to use that capital directly with their end customers, or is it just going to be a capital source for other guys? So I think
it's a very, very interesting thought. That changes the role of the bank actually, If I'm just an underwriter rather than a really, functioning institute today, I would like to see your views, Manish, on this one.
So, I think Bill Gates once said, we need banking, not banks. Okay? And that's where this world is headed to. All of us need to be able to transact. Would that be through banks going forward? And what would be the future of banking? Just to tell you, give some facts. So Citibank took 200 years to get 200 million customers, right? Facebook took 10 years to get 2 billion. Amazon, Google, LinkedIn have about 500 million customers within 10 to 20 years. Paytm has 300 million customers. So if you look at what the internet has done for client acquisitions and the ability to transact, I guess what determines what banks are going to be. And, and you just mentioned about that, what Iyer had said about Google and Facebook and Amazon, is that where banking is headed? I guess throws up the discussion.
Brilliant. I come back to Shankar. What's your views? Are we really having a banking institute today?
So obviously I'm the only banker on this panel, so I have to take a slightly contrarian view, if not for anything else, but for just being the banker. Yeah. So I kind of agree and at the same time disagree with my fellow panelists in the sense that I think I agree that yes, banks have to change as to how they are looking at themselves today, and I think most banks are aware of that. I don't think it's lost upon them that their existing business model, or rather the business model that they used to operate in the past, is going to work in the future. I think pretty much everybody who works in a bank is aware of that. The question is, what model will be working for the bank as we move forward? And I think, to your point, sir, I think the biggest advantage that the banks have is the existing customer base. You don't need to convince that customer that here is a provider of a service who is stable, who is, has the ability to support and who potentially will protect the capital or the savings that you have. I think that's the starting point you have. And that's probably the biggest flag bearer for banking today, the comfort and the history that the bank brings onto the table compared to potential, alternative lending companies or payment companies and so on and so forth. And I think to a great extent, what one also needs to factor in that the businesses which are going away from the banks, be it payments, be it some amount of alternative lending, these were anyway not revenue generating opportunities for the bank. These were add-on services that the bank was offering to retain their customers primarily. Their revenue was being generated from a completely different areas. So in a way, the fact that somebody else is coming and making the process efficient is obviously something that the banks has to imbibe, change their policies to become efficient themselves. If it means outsourcing that process to an alternative provider or somebody who is able to do it cheaper, maybe yes. But there is still the benefit that you have, which is the comfort or the comfort that the customer has. That here is a provider that I have been dealing with for multiple years, and I have that benefit coming through from them.
So thank you. I mean, you've given actually a very important lead. It's called customers. And that important lead further goes to customer experience, retention, and so. One of the figures I'll share with you, I think in Western world, the customer churn per institute is almost around 1.2, kind of percentage. Any guesses what would be India?
Sure, much lower than that.
Much lower than that? Okay. So I'll start with you. The percentage in India is actually 3%. So one person actually changes one institute, probably in a month perspective. So we have a lot of options with us, and technology is enabling those options. So with you, Ganesh, what's your views? Is really a banking problem with the customer side, or it's banking as a service side of the street?
I think banking is a very well-established and age-old sector to kind of just look at and say there's problem on one front or the other. Right? It's evolved over a period of time. In fact, formal banking has evolved since 1600s, and it's kind of been built in a certain way. Where I think we are kind of looking back at it now and saying, how do you unwind this or change this? So if you take a step back and say, what are the key elements of products, services, process, channels, and regulation, right? Now, and customers, which is actually the first. So today, the customers are changing dramatically. There are also a whole bunch of customers who were never banking customers till 10 years back, whether you take millennials, whether you take people who just live their life differently, right? And so that's one. Second is also on the product dimension. Because their needs are different, the product dimensions are also changing. The third is on the process front with digitization and tech. Things are changing, and what wasn't possible yesterday is today possible. Right? So you can go through all of this, and regulators are getting smarter, and channel clearly between mobile and everything else. We have seen how distribution has evolved. And to the point that Munish was making, I guess the best tech companies in the world took 5, 10, 15 years. Ali and Tencent have taken a couple of years to do that with wealth management services, lending services, payment services, so on and so forth. So I guess the point is all these wheels are churning on their own timeline. But banks who are established and have had a leadership position in financial services for a long time are trying to kind of catch on to all this and say, how do we still stay ahead? So I think it's a complex problem. I can empathize with that, right? But the reality is I bet on companies which are helping move banking forward. Yeah. And some of them do it through transformation, to your point, or disruption. Some of them do through collaboration. Right? And as we were talking earlier today, the digital banks, number of them do it through collaboration in emerging markets, which I think will move the industry forward overall.
So I completely agree. And I think all of you spoke about that banking has to change. Financial institute has to change. This change today probably is called the transformation, and largely people are calling as the digital transformation. Now, Ganesh, you have been investing almost and plan to invest around $20 million plus in fintech companies and so. Now, disruptive models are the game today, and banks don't know how to play these. So how would you choose the transformation versus the fintech disruption or the risk in the market today?
So just, sorry, correction, we are investing about $300 million in fintech because we are a global fintech only fund, emerging markets. But 20 million that we discussed was in digibanks. So across markets, 4 different markets, digibanks. I think, we don't kind of look at a company and say, are you going to disrupt banking, right? And you will hear tall statements made in some parts of the world, like Valley, where entrepreneurs have the luxury to stand up and say, I want to raise a couple of $100 million and start disrupting banking from day one. It catches a lot of attention. The reality in our markets and, of the 10 emerging markets we invest in India is at the forefront. It's the market we invest in. 30% of our investments are in India, roughly. We believe a lot in collaboration. So we have companies which entirely develop new products. In fact, we have a portfolio company called Neo Growth, which started what used to be merchant cash advance in the US, but it's a very different product in India with sort of a similar label, but very different product, regulated. And now it's become more common, but they were the first folks to kind of start it 6-7 years back in a meaningful enough way. At the same time, we have, and by the way, there are a number of banks who are wholesale lenders to Neo Growth. So it's an ecosystem. We work together. Bottom line is, how is it going to make a difference to the consumer or the SME? And hence move the industry forward and help you create a meaningful enterprise. So it's less about disruption for the sake of disruption. It's more about what's the value you're delivering.
Sure. I'll come to Shankar. Shankar, digital transformation, the value. But I think, and it's my personal view, a lot of fad is there, right? I have an app. I am a digital banker. I am a financial institute. I can fund you through app. A lot of product innovations are happening from a digital perspective. Is this really digital transformation? I don't think so. So what's your views? Is it really fad or it's reality?
No, I think there is obviously a certain amount of reality. Again, as I said, the first point is that banks realize they need to change. I think that's very clear. I don't think anybody is confused or needs convincing on that front. And I think probably where you're seeing material developments is not so much in terms of product innovation. I agree with you. Just putting up an app there is not necessarily going digital. But really probably on the process innovation side, I can say again personally from our bank perspective also, there's a lot of work going on to make our processing significantly more efficient, obviously cheaper, and offer better products to the client by improving your back-end processing. Now, it could be not restricted just to payments. It could be a separate product that we have to kind of automate the receivables management for a corporate today, where we use artificial intelligence to kind of build machine learning into the receivable platform for clients. It could be pretty much on trade finance, which is another area that banks do actively participate, which is not a place that has got much active disruption. We have capacities, given RBI's changes, given that RBI customs, etc., are now operating on a digital platform. That process, which was earlier extremely document-centric, has now become very digital. And banks are able to offer more efficient process to corporates and clients who are involved in trade financing. So I would say innovation, digital has happened in banks, but more on the process side. I wouldn't say that we've done something spectacular in terms of product innovation. That's probably the next area that banks need to focus in. Or, as I said, probably partner with guys who are doing a better job of it and allow them to do that while we keep making our processes more efficient.
So, process sided, I think I'll go to Munish yourself. We are seeing 3 angles. One is this fintech disruptive models coming up. So banks, if they really want to survive in the market, they need to adopt the new business models. Else they will start losing the relevancy in the market itself. And the second point or the third pillar of the whole discussion is the product versus process. Today, a lot of people have seen doing product innovation, but the process is not being touched, or it's a different animal to be taken care because the institutes are huge and large to really change themselves. What's your views on this part?
So this is debated all the time. And so I'll just refer back. Some of you may have read the latest Citibank report on the ABC of the future of banking. and the disruptive financial disruptions. So it essentially says A is for artificial intelligence, which leads to a lot of robotics, cognitive stuff, analytics, chatbots, a lot of things which goes and improves process improvement, underwriting, etc. The B part of it is big tech. And that's the little controversial stuff where there's now saying that banks don't fear fintechs, they fear big tech. Fintech has become a facilitator and it's helping them innovate and they're collaborating, to Ganesh's point, and doing things together, but they fear big tech. They're fearing Amazon, they're fearing Google, they're fearing the Facebooks of the world, because that's what's taking a bit of banking away. Right? Just to give you an example, Ant Financial, which is a subsidiary of Alibaba, is valued at $150 billion, which is more than Goldman Sachs, it's more than Royal Bank of Canada, it's more than Barclays. Right? It's a subsidiary of an e-commerce company. Right? That's the landscape change. And the C of ABC is essentially the changes in the core banking system, the CBS, and the cloud infrastructure. So a lot of these three things coming together is disrupting the way banking is done. Now, how that fits into product and process is, I guess, dependent on various components of that.
I agree on that side. And, I'm coming to Ramas yourself. Actually, there is a question which is coming across the board. One is about customer. And every institute, whether big or small, wants customer experience to be at large, very good, delighted, and so. And digital is going to help us. Now, whereas I'm taking the touch points with my institute or my financial institute, whether bank or non-banks. When I am actually hailing Uber, I'm doing a payment. How do I do a payment? Through Paytm or a wallet or something like that. I hardly touch the banking institute today. Other than if I have an advisory or a very large loan to be taken, else even the microfinancing today, Google announced, I think, that I'm going to give it on a fly, instantaneously, with conjunction. So, how far bank can actually control this? They don't have anything in their hand.
I think, I think one is that we are taking those label banks. And I think one of the things probably that needs to be transformed, and maybe digitally, is banks looking at themselves as what role they have to play. And maybe instead of seeing themselves as in silos as a bank, vis-a-vis and Apama, which is in Apple, Microsoft, Facebook in another silo, and then fintechs in the third silo, and deciding which silos are going to play what, I think banks will need to figure out, look, they have the best access to cheap capital. They are regulated. They are bodies of trust. Do they want to become something different? Right? I mean, do they want to be solving the problem that is there in front of their customers? Or do they want to say, look, this is how we have functioned, and we used to move 5 pieces of paper, now we are digitally moving 5 pieces of documents. So I think the question really, and we do supply chain finance, so we do about 1,000 crores a month, and we do it on the back of banks. So please, there's no disrespect ever meant to banks, but I depend on them. But the point of the matter is that the only reason why we can do it vis-a-vis a bank is because we didn't have an ego. We said that most small businesses don't require a URL to go to or an app to go to if they want to finance what they're doing. Most businesses do buy, make, and sell. Finance is not a word that comes into their mind. So how do I kind of construct financing as something that's completely invisible to that process? Where Vayana is not seen, the bank is not seen, but they know that every time they invoice, they get money. Or, they have to pay someone, they get money. And I think that's a trick. So, if banks really have to kind of compete in this market, they have to forget that they are, XYZ bank. They have to say, look, these are what my customers are asking for. They want money, or they want to make a payment, or they want to do a remittance. How do I insert myself into the process as painlessly as possible? One simple example I usually go to banks is that, we keep talking about digitization. We have just taken the physical construct and moved it to the digital world. We had a branch we went to. Now we have an URL we go to. We have an app that we open up. We have to go to the bank. Now, yes, it's become easier, simpler to click an app vis-a-vis going and, especially Bombay traffic or Gurgaon traffic going into a branch.
Especially the rainy days, right?
Especially the rainy days, and especially, when you've not told your wife you can't come in. But the point of the matter is that, you have to radically think about what problem you're trying to solve. I think one big issue banks have, and I think not just banks, large corporations, anyone who has been successful is that moment you have some successful revenue stream, it is very difficult for you to innovate. Because you are all the time thinking of how to protect that stream of revenue. And you want to try and create as many moats around it, as many ways around it that the solution is relevant, rather than focusing on the problem. So the underlying problem today is that, and which I think some fintechs are trying to solve, is that your consumer wants very easy loans, or consumer wants very easy way of doing remittances or of payments, and you have an whole bunch of guys who had nothing to lose, who had no legacy revenues to come from, and saying, look, we'll do this in the way that the customers want, because we have nothing to lose. And I think banks, are at a disadvantage because they're saying, oh, no. By making them fill 3 steps, giving, 2FA, 3FA, asking for, all the details about their wife's name and first name and telephone number, I'm going to make the process very trustworthy, and I'm going to make them do it, and therefore, that's why we are relevant. I think that's where the problem is. I think banks, once they forget their banks, I think they'll be very relevant.
That's a good point, but, how can, Shankar forget their bank, actually? If he forgets, I think many people here putting the money inside Shankar's bank will be in a question mark.
He's basically saying banks are dinosaurs you can bypass.
That's why I want this question.
No, but before you go, Ganesh actually factually made an error. He said 1600s when formal banking started. 255 million years is what I think the rough estimate is when it started.
So I'll come back to Ganesh on this one. But I think, Shankar, you heard 2 voices, right? I mean, saying bank needs to rethink whether they are really banking or not. What's your views?
So again, the point is simple. Banking as it stands today needs to change. I think what the banks enjoyed over, whether it was 250 million years ago or from the 1600s, was entry-level barriers were very high into this space. Okay, that is exactly what the banks enjoyed. Now, as you correctly called out, that entry-level barrier no longer exists because technology has broken down those barriers, which is why we need to completely rethink the model. Earlier, we had the benefit that whether it was regulatory, whether it was just because of the access to capital, whatever you call it, they were entry-level barriers for others to enter the space, because of which banks got bigger, got media, were able to retain the customers, and were pretty much the single source of access to all these financial instruments. Today, that barrier is broken, so they have to obviously reinvigorate and recalibrate. For me, the way to do this is obviously something which, again, I personally think all banks are thinking about it, is as to decide which areas do you want to focus on. You're no longer potentially going to be a full-fledged universal bank that just wants to do everything and anything for every customer segment across the globe. You're not going to be that. You're going to be picky and choosy about which areas you see the benefits coming from. You decide that, okay, in these segments, I'm going to be probably the best and the biggest. And then you go full-fledged in terms of whatever strategy you want to deal with, whether it's brick and mortar branch banking or whether it's completely going digital. You still have the benefit of the fact that you have a brand, you have a reputation, you have history behind you, and you have customer trust with you. I think that's your biggest selling point. You then need to strategize as to what works and just focus on that and obviously try and keep your revenues going in the process.
So I agree. I mean, please.
No, quick comment.
I would expected that, actually.
So 2 comments. One is I disagree with Iyer. It's totally unrelated comment, but I've been wanting to say this for a while. But that aside, if you just take a step back again, I think I don't know if the debate should be about whether banks can survive or not, whether we need banks or not. The debate is about how is financial services going to penetrate. And in number of our markets, including India, and markets we see in emerging markets, especially India leading with forefront, the penetration has still a long way to go. Whether it's supply chain financing, working capital, invoice discounting, consumer loans, insurance. I mean, you just look around you, right? So the point is, first of all, there is enough opportunity for newer models, whether it's product, process, channel, whatever innovations to play with each other. But yes, over time, I guess, is that going to impact banks in a big way? And are they realizing that? Yes. But I guess generally, if you shift the discussion to saying where the gaps are, and there are massive gaps all over the market for us, I think the banks and the other players will all start figuring out where they can play and hold their fort. Because if you don't have a differentiation, you're going to be a Me Too out of 200 banks in the country. Those days are gone. I think you are eventually going to fade away.
So completely agree. But, for a very small institute which are very focused towards, let's say, lending side of the business, I might just focus on that side. If I am on retail banking, I can do that. But if you look at largely a country like India, there are at least 70 institutes which are in probably every business function today. They are into digital lending, digital payments, digital treasury function, credit line, corporate, SME financing. For these kind of institute, largely we are depending on the economy on that as well. I mean, some of the public sector banks, if you look at it, now what they will do is they will open 3 digital branches where you can go and touch the screen and come back without nothing happening on it. I've actually seen it. Versus changing the organization. Okay? So we have this process, people, technology, all of this, people talk about, consultant will always guide you accordingly. But there are challenges. And, Ganesh said, what are the gaps here? So according to you, what are the gaps we are trying to close within the institute around the pillars like people, process, and technology? Which are the most important ones? Start with you. Anybody will take it.
So I think you mentioned, number one, it's a huge challenge. And if you just break it up into technology, people, and skills or processes, so technology, process, and people, I think the technology is broadly available. If the fintechs and the other technology companies have it, it's even available to the banks. I think skill set gap is huge, right? Just the fact that you need skill sets to make that happen is big. To my mind, and I've seen that example in a lot of large companies, is really the top leadership. Their ability to grasp the change, the transformation, and then make it happen. It goes from the top. And just to give you an example which has worked, and it's not in India, is really DBS Bank, right? So DBS Bank in Singapore, and Piyush leads it, actually decided to transform the bank, and they trained everyone on new skills, back office, middle office, front office, and they are the most successful digital bank. The profitability is improved, their ROE is improved, their growth has improved, right? So that Singapore bank has actually shown the way. Now, can you expect one of these PSU banks to do that, or one of the, some of the other little laggard banks do it in India? It's a fairly tough ask. Now, I wish it happens, but it needs a huge leadership change, according to me.
Sure. Any views on that side? You have been on a different side of the table.
Yeah, so I think in India, and I'll just talk specifically about India, and I'm just going to argue exactly the opposite of what I started with. I think, banks...
That happens.
Yes, I just thought it's getting kind of one-sided. I have to join my friend Shankar here. I think there's an incredible opportunity. I think a panel before that talked about the fact that a lot of data is coming in now, right? India is going to be one of the highest rich quality data providers ever. Whether in the SME world that I inhabit, which is GST data and e-way bill data, or in the consumer world with, the JAM Trinity. I think what we are seeing now is that data is going to be commoditized. I think credit models will evolve, but they will also soon become commoditized to an extent that, it'll be difficult to differentiate one from the other because alternate data will not be required. So I think there is going to be a huge rush for what I would say is much cheaper capital. And I think the banks are the only place that can provide that. So I think there is a huge opportunity that fintechs like ours or, NBFCs are going to find a little difficult to compete with because only the banks can provide cheaper capital because the risk is more calibrated. I think the point that Munish made, which I think is very, very important, is that the banks will have to transform to people who can reach out to all these guys. It's going to be a distribution challenge for them. And a distribution challenge that is very different from the current strategy of branches and offline and everything else to figure out how do they kind of embed themselves into various things. The gentleman before us, Piramal, said, the reason that he's successful vis-a-vis a bank or RBI, I told him that is because he understands the business. And I think the big challenge for banks is to be able to understand the business of the business that they're lending to, right? And I think that's going to be much more crucial for them to kind of transform their people with. Rather than anything else. I think the opportunity for banks, just because they have so much access to cheap capital, is going to be enormous in this country. Because I think in no other country, in my opinion, comes close to India in terms of the rich sources of data that we are going to get, which is going to be pretty authentic. Right?
So, coming to you, Ganesh, your question is very simple. Process people, and we talked about leadership. I think we talked about what the change people needs to go through. Technology is available for us. What about process? I think we have done nothing in the innovation perspective around the process side. We still follow age-old process, whatever said and done, even if small lending is happening. That's a huge change. So according to you, what's the fintech world is going to disrupt it?
Actually, I would probably say the opposite, which is if you look at innovation and in what we do, when we look at fintech, thankfully there are enormous amount of parallels between US, China, India, Brazil, across markets, big markets. There are enough parallels. The biggest difference, why if you talk about potentially successful fintechs that can be created in our markets versus a market where infrastructure and ecosystem exists like US for a lot of services, and usually it's a transfer of customers from one player to another. Versus in our countries where new services are being delivered, a lot of it actually has to do with process innovation. Because we are, at least on day one, for a lot of new services, it's not about a rocket science product. It is really about end-to-end getting the product right. So if you take lending, it starts from origination, sourcing, documentation, processing, underwriting, prepayment, collections, then repeat cycle. How do you stay on top of asset quality? And you can go through this for all different subsectors within fintech or within financial services. But the point is, I think the breakthrough successes will come with products which are not sort of off-the-chart rocket science products, but they have tweaks to make it relevant for our customer base with a phenomenal innovation on process side, end-to-end process side. That is where I think most successes will come, and that's what we are seeing even within our portfolio companies. So I'd actually argue the opposite, saying you'll have to do that to succeed. It's not just about breakthrough products in our country.
So in a nutshell, what you're saying, Ganesh, is that process side value realization is yet to come, and it is a much bigger value than actually the product side. And if we combine the product and process both together, we'll get a much bigger value. Let's talk to the bank actually. So what's your views?
So as I alluded to earlier, I think the process innovation is something that banks are geared up for. And I think they have all done it. I agree that probably you don't find them in the Indian public sector bank space, or at least you don't see them. But they are looking at it. Now you can look at the private sector bank space. They have actually done quite a bit of significant process innovation. Today, in a bank as well, you can get a 5-minute loan. It's not just restricted to a startup or somebody like that. A bank does offer 5-minute loans for you if you're an existing customer of that client. So process level innovation for sure is happening. I can again say from our own bank's perspective, there is significant improvements in process efficiencies. Robotics is very much part of how we want to do a lot of our transactions at the back end. So I would say for sure process improvements are the focus, I would say. And in fact, to Ganesh's point, I agree with you. It is about tweaking the existing products so that you are a differentiator. And also to Ayer's point on data. See, we actually have a customer base. We have data. We are just not using it in any form and shape to kind of innovate and think through how to use this data more effectively and offer our own existing clients stuff that is more relevant for them. That is exactly what the mindset needs to change. You have access to data. You don't need to go around looking for data. You don't need to go around looking for customers. You got customers. You got data. You just need to think about using that in an effective manner to tweak your product offering to the same customer. So actually, I would say banks don't have it very difficult. It's just that the mindset needs to change to think of it like that and then bring those products to the fore. Then, you have a ready-made customer base to kind of sell it and market it and obviously profit from it.
So, you highlighted one important word which is called data. And synonymous to data is also called regulators, right? Suddenly I remember without regulators discussion, we can't complete our discussion actually, right? Now, remember 2000 we have .com burst, then 2008 people remember? Guys, 2008, right? Yeah, you were selling your company? Okay. So 2008 we heard again recession coming into the financial sector and actually globally it came out. So technology is also a boon, technology is also a disadvantage. We have seen in 2017 and 18 in India also, we bypassed the technology. And there are people who are now in England or in Hong Kong, not able to come back to India and so, right? So technology can be bypassed. There is a risk involved into it, and regulators play a very important role to control and balance this out. If I ask, sometimes institutes feel that it is against their innovation. I want to do the innovation, but I'm not able to do it because my regulation says data sovereignty. And recently the principles have been released by Indian government as well. Now, I want to really take this discussion much deeper from all of you. Regulators are really enabling us today, the way they have been approaching, or you feel that regulators are not enabling the innovation or the transformation of the institutes? Ganesh is always...
In the name of regulator, everyone's silent. None of us want to say anything that shuts our shop. Yeah, I can. Good. So... Excuse me, I think in general, everything has a relative context. So if you look at it contextually in the last few years, I think regulators in number of countries, and definitely RBI, have taken some very impressive steps, not just on sort of subsectoral basis, but also on functional basis, like the debate around data, etc. The challenge is the world is changing so fast. The question is, are we keeping up and are we making a decision with full understanding of the issue? And the decision we make eventually makes us more handicapped to be able to foster an industry, or it becomes a limitation. That's one. The second issue is, by the time we make a decision, has the opportunity passed by, or we are 3 years too late? And maybe to end with a controversial statement, which might be my last. P2P lending is a very classic example, because P2P lending went from zero to triple-digit billion-dollar industry in China, right? And then the Chinese regulators started weeding out a lot of bad apples. Now, we were waiting all along to watch how this plays out. And once it became a $200 billion industry, we said, look, we said this is going to fail. Now, the irony is obvious. After it becomes a $200 billion industry, if we say it's failed, and now we'll start picking regulations from a regulator who's trying to regulate an industry that's so big, we're just comparing apples with oranges. We are not sort of on the same reference point. We are at a nascent stage. We have to figure out how to, first of all, do we believe in this industry or not? That is an important decision. The second is to say, how do we regulate to foster it? Not, retrospectively look at regulations of an industry that's the largest in the world now, way beyond even the US. So I think that's one example of the dichotomy, but, that's what I mean.
So what's your view? Is it enabling or it's not enabling?
No, I think in general we have done, 5 years back.
No diplomatic answer. Enabling, not enabling.
We have done a good job. We have done a good job. But the risk is, I think the world is moving so fast, there are several areas we don't have time to understand and regulate well. And that's going to be a challenge. So I don't know how we fix that. That's going to be a challenge.
Shankar, I've come to you. What's your view, right?
Absolutely the wrong question for a banker to answer. But I would again say enabling. To answer your question in one word, India has its own set of challenges. It is a country which is wide, which has got a lot of unbanked or uneducated population. So you need to be careful about that piece, also think about from them. But again, I'll take a slightly different route to say how I feel regulation is enabling. And I'm moving away from payments for a change again. So primarily again, I think I just touched upon it earlier. This regard to trade finance, how it used to be such an archaic, to a certain extent, document-heavy process in terms of a transaction for an export or an import to be processed, and how with RBI and customs coming together onto a digital platform now, that process has become extremely efficient, obviously significantly lower in terms of cost for the banks to process as well as for the client to process. And most importantly, you are able to move forward a transaction in a few hours. What used to probably take 2 to 3 days on an average to process, today is getting processed in a few hours. And you're almost completely done away with documentation. So here is a perfect example of a trade which is extremely important for the country, and RBI along with customs and everybody has made it super efficient. And I think every exporter and importer should be extremely happy with how they have brought in regulation to kind of support that.
Brilliant. I'm sure Governor is very happy with you.
Shalil, I think, just from the fintech world and looking at data, I think I would say that all of us who are, trying to innovate in whatever direction that we are going, I think we need regulation. And I think the 3 key words for us is please regulate consistently. I think the big worry really, and I think Ganesh touched upon it, is that you want regulators to behave in a consistent manner. Anybody who's played cricket or any kind of sports would know that people don't mind biased referees as long as they bias consistently, right, in one particular direction, because you can plan for it. And I think what we really need, and I agree with, Shankar also, I think regulators in India have been really very, very, especially for the last 7 years, I think, have been exceptionally proactive in terms of figuring out where the industry landscape is moving. But you need to kind of think through, like, crypto is a direction in which I think somebody needs to very accurately kind of put out a white paper from the regulator saying that what the risks they see, do they want a sandbox where they can experiment? Because you don't want to be left behind when the rest of the world is kind of looking at it. You want to have a sandbox, you want to have a mechanism where you can experiment, you can contain the risk, and then to create regulations that actually meet market conditions and stick to it for a few years. One worry I have in India, and especially we saw that with GST, is when policymakers act like they are startups. Because if you have every day you pivot and every day you change the game, it becomes very difficult for you to figure out where you want to go. And, I think that's very key. So from regulators, actually what all one wants is that please regulate in interest of the consumer, but regulate consistently. And I think that will be really, really welcome.
It's a quick point. I thought we almost got done with the discussion without saying crypto. You beat us again.
Blockchain, AI, and ML.
We have extra 5 minutes for that.
I mean, we can't complete the technology discussion without saying machine learning, artificial intelligence. By the way, what's your views on?
Just a quick point on that. I think our regulators pride ourselves for not crashing because they never take off. Okay? I think they kind of suffocate a lot of these innovations. Now, we've seen that with KYC and eKYC and UID. So you've, enabled but not enabled. And you've gone to and fro with a lot of these regulations. Now, when you're in the startup world or innovating, your biggest constraint is capital. And if the regulator is the one which is, actually, not helping you preserve that, in fact, burning that through the irregularities in regulation, I think it's a problem. At the same time, I believe providers like NPCI have done a fantastic job. To my mind, they are the biggest innovators in India. So the way NPCI has gotten capabilities into the market at a pace and with the kind of sophistication, they've actually got the best of banks and NBFCs catching the tail to adhere to those. And I think that's a prime example of how they could lead from the front.
Thank you. Thank you very much, all of you. I know we could actually discuss another hour or so. But I think in summary, what we could understood from the discussion today is that change is a must. And it's going to be a lot painful for larger institute to do those changes than actually the fintech companies who are coming and disrupting the model. So the decision or kind of rest, how fast the change can be done, else we'll be always catching up with these new innovations which are coming up. Thank you very much, gentlemen. Thank you very much for the time today. And hope you enjoyed the discussions today. Okay.